Hello, everyone. My name is Ryan, founding partner of Hashed. Today, we will talk about how institution can join to the crypto world with Richard Teng, the CEO of Binance. First of all, happy to talk with Richard Teng today. And maybe can you introduce yourself briefly?
Hi everyone, I'm Richard Teng, CEO of Binance. We are the largest crypto exchange globally. We currently serve close to 250 million users globally. And myself and Ryan have been friends, old friends. So when Ryan asked me to do this, I said certainly. Great to be back to Abu Dhabi Global Market. I was here from 2015 to 2021. We were CEO of Financial Services Regulatory Agency. So glad to see everyone. Before we start, who owns crypto before 2024? Before 2024. Good for you. All of you are happy people.
Yeah. Today, we will talk about institution trends. So Richard Teng is a perfect person to interpret how institution can join. And maybe you can talk about what kind of trend is happening in institution.
Sure. So the first question I asked, who owns crypto before 2024, is you see quite a lot of retail people embracing crypto very early, right? So crypto is the only asset class that goes the opposite direction. Every other asset class, from stocks to FX to bonds, starts with institutional adoption, then goes down to corporate, then finally high net worth, and then retail. If you remember, crypto was embraced by retail for the longest time. Institutions say it's a passing fad, it's a scam, you'll go away. Regulators are not spending time, energy investing into this space. So 2024 has been a landmark year for crypto. Firstly, beginning of the year, you have the Bitcoin ETF approved in the US, giving this space credibility and recognition that it has always deserved, right? And then you have ETF approved around the world after that, from Hong Kong to Canada to Brazil, and the list goes on. And then you have some of the largest institutions in the world, the likes of Larry Finn, BlackRock, largest asset manager, went from a crypto skeptic to a crypto believer now. I think that's a huge shift. So this year alone, we saw a huge increase in terms of our institutional onboarding of clients onto our platform. Many clients are starting to do, institutions are starting to do allocation into this space. A lot of traditional trading desks that just used to trade commodities, FX, stocks, and bonds are now adding crypto trading desks to diversify that trading and to take advantage of those opportunities, right? So that trend will continue. We are still in a very early stage. And with a pro-crypto president being elected in the US, I think that's a landmark shift. I think the US has gone through a tough 4 years in the crypto scene for the last 4 years. The next 4 years will be, I believe, a pretty good era, a good time to be involved in this space. So crypto adoption now is about 7% globally. If you look at what happened to internet, once you reach 6 to 7%, the next 10% will come through very, very quickly. So next year will be an even better year, I believe, for crypto, because more and more institutions will come on board. Institutions, as you know, need time to do their due diligence. It ranges from 6 months to 12 months, and many of them are very early. But with US saying that it's going to have a Bitcoin strategic reserve, I think that FOMO will set in towards the rest of the government agencies and governments around the world, and more countries will adopt that in terms of having Bitcoin as strategic reserves. So it's quite interesting to see what will happen in 2025, but I believe it's going to be quite bullish. And then with inflation under control in most part of the world, interest rate coming down, we see a lot more allocation now.
Yeah, sure. I mean, after Trump got elected and everyone is going into crypto, especially Abu Dhabi, obviously, the first one, and also Singapore, Hong Kong, Korea, Japan, all the government is announcing a Web3, a friendly policies. And we are definitely looking a lot of adoption in institution world. And if you see retail investors, now they're trading thousands, tens of thousands coins. Obviously, like you said, the BTC ETF is a first signal that institutions will buy into ETF, but you expect more assets maybe our coins will come to institution pretty soon, or it takes time?
I think that will take time. I think institutions, especially much more traditional institutions, are much more familiar with products that they see have already been listed on exchanges, right? So ETF of Bitcoin, Ether, I think those they are familiar with. But the institutions would realize there's a very high liquidity cost and liquidity risk associated with just pure exchange product. Because if you think about it, crypto is 24/7. It trades 24/7 throughout the weekend. But if you just look at ETF, if you just have exposure via ETF, let's say in the US, it only trades within a certain number of hours. In the US, weekends it doesn't trade, public holidays it doesn't trade, in the night it doesn't trade at all. So you can't take exposure, you can't get in, you can't hedge, you can't exit to manage your risk. So there's a very high liquidity cost and risk associated with that. And once institutional realize that, you'll see more and more activities gravitating towards 24/7 type of platform globally. Because if you take that away, 40 to 50% of the time, you can't liquidate your positions. You can't take advantage of new information coming onto the market. I think that is a huge price to pay on those fronts.
Yeah, definitely. And also, currently, I think such a huge euphoria in the institutional market, but still, from our perspective, it's a little bit slow. So what is the biggest barrier for institutions? Still, they're not, for example, like hesitating to invest to crypto directly, or like regulation-wise, infrastructure-wise. What is the biggest barrier for now?
So you have to understand institutions are corporate animals that have, bureaucracy involved in it. They have, board structures. Key decisions have to go through multiple layer of checks and balances. So it tends to be much slower in terms of, firstly, decision making, and then secondly, all the necessary due diligence they have to go through, getting buy-in from all the different stakeholders to come through. But we are seeing that shift starting to take place. It will take time, as I mentioned. Even some of the due diligence to be conducted by institutions take between 6 and 9 months, and that's pretty normal before they start allocating into any new asset class, right? So that will come through. But in the first wave, what you saw coming through very quickly are things like the family office, right? They come through very quickly. Once they see the shift in momentum, shift in terms of sentiment, they come through very quickly because they are structured very differently. They can make decisions very quickly and they can move very quickly, right? So we have seen that coming through very quickly. Some of the more nimble institutions have come through quite quickly. And with that mindset shift and change globally, many of those will come through. But it will take time. And then it will filter down from some of the top institutions and then slowly towards the slightly the more conservative ones.
Yeah, we are meeting a lot of financial institutions now, but maybe it takes time, like Richard said. Firstly, a gaming company or tech giants, or a lot of also recently RWA is coming, so real estate company are very interested in. So we'll see the trend slowly. And maybe we could talk about the behavior of institutional investors and retail investors. If you see retail investors now, they're beasts. They're going to DeFi, they're trading meme
Especially in
coins.
Korea.
Korean traders are crazy. And I think a lot of retail investors, I think they're definitely moving forward. And institutions, obviously they can think they're losing alpha, but at the same time they have to think about security and how they can address a good infrastructure for the clients. And how can you compare institutional investors and retail investors in terms of what kind of maybe a custody service they have to use, and what kind of limitation institutions have, and also on the other hand, what is the benefit they have compared to retail investors?
Okay, so in the first instance, I mentioned just now that crypto is the only asset class that's embraced by retail in the first instance. And for the longest time, institutional doesn't understand it, have been staying on the sideline. So, but it also shows the savviness of men. Crypto took off initially being embraced by the very IT savvy, the geeks, right? because they understand what blockchain technology is, right? The beauty of it, the immutability, the trustlessness of this, and how important it is for them, right? So if you speak to any of the 20-something year old here, they will understand this technology compared to on just average, right? Don't come after me. On average, the 40, 50, 60s, because they grew up in this era. They know this technology much better than most, and they have done a lot of research. So their mindset is very different because to them, they know how to set up a private key. If you ask a person in the 50s, go and set up your private key, private wallet, cold wallet, they may not know how to do it. So therein lies the challenge. So it's an awareness issue among the institutions. But now they are coming through in a big way, I think, in going forward. They are going to raise that level of awareness. So the challenges between institutions and retail are different. For retail, we always say that be careful, do your own research, right? Don't FOMO, don't just jump onto the bandwagon because your friends say, buy this, or this is going to be the next big thing. Do a lot of your own research. We have Binance Academy, which is free to air portal. We have thousands of very good information in there if you want to learn about blockchain, crypto. Get acquainted, understand it. If you want to invest more, understand this space first, right? So that's our advice to retail. For institutions, the opposite is true. They tend to be very cautious. So again, we educate them in different ways, right? To say that this technology is something very different. I still have institutions coming to me to say, what's the clearing and settlement risk? Is it T+2, T+3? And we have to explain to them, as well as to the regulators, that this is blockchain. It's instantaneous. You have taken off the clearing and settlement risk. Once the transaction is done, it's done, right? There's no T+2, T+3. We have regulators asking us to set up a clearing fund, which is a very TradFi Web2 concept that applies to stock exchanges and futures exchanges, because you have clearing members, you have risks that you need to mitigate if the members don't go through and satisfy their trades, right? But again, blockchain is instantaneous. And then the technology is different. You can trace, people said, crypto is associated with scams or fraud, or money laundering. If you look at global data, and this came from US Financial Crime Office, Europol, if you look at the amount of money laundered through the crypto industry, is 0.02% of what's happening globally, right? Most of the laundering still happen through the fiat channels, banking, property, etc., etc. So there is a misunderstanding because unlike fiat, if you have 100 million, you start distributing them in cash. I can assure you, you can't trace them. In crypto, for those that understand crypto, no, you can trace to see where the funds are being transferred to. So it's a traceable technology. And we work with law enforcement agencies around the world to deter and fight crimes on that front. Every year we receive 60,000 law enforcement requests. So a lot of this education has to go through for people to raise their awareness. We are now the most regulated exchange globally, right? So we have 20 different places that we are regulated, including here. So we look forward to continue to educate both the regulatory agencies as well as the institutions on that front.
You just mentioned the Binance Academy that institutions have to follow with a study and research. As a CEO of Binance, is there any initiative to onboard institutions to Binance, or also bridging between a traditional world and crypto world?
Oh, certainly. So as I mentioned, this year alone we saw a sharp increase in terms of the number of institutions that have onboarded with us, right, on our global platform. I don't have the latest figure, but by August this year, compared to last year, there was a more than 40% increase, right? And that figure has been very robust. I think after President Trump has been elected and the shift in sentiment happened, I think that figure has skyrocketed, right, amongst the institutions. As I mentioned, a lot of trading firms that just trade commodities, futures, products in the past, have now added a crypto trading desk. We have family office starting to allocate. We have institutions starting to allocate. So we are seeing a lot of new institutions coming through on our platform now.
Okay. So today there are so many institutions considering to invest. At least I think 1 to 5% of a crypto asset out of their budget. And can you share advice how to allocate their asset? any advice for the institutions here?
How to locate the
I
asset?
mean, allocate. I mean, what kind of asset or
Allocate their assets. Well, I think all of them will have to do their background thinking on this issue, right? So it's not for me to give financial advice. I think they will seek advice, they will have different points of reference and consideration, and they will come to a decision on that front. I would think that in the first instance, most institutions will start allocation into the majors, right? So things like Bitcoin. I think that's the first natural port of call. If you look at Bitcoin dominance within the crypto industry, it accounts for more than 50% of market cap. So it's a very easy way of referencing the industry. So I do think that in the first instance, they will come via Bitcoin. As and when they get more comfortable with that, and the awareness, knowledge continue to increase, they will start to venture into other parts of it. Yeah.
Yeah, and like I think everybody knows like Richard Tang used to be a CEO of ADGM long time ago. Can you share your insights about why Abu Dhabi will become a hub of crypto, and what is the benefit of establishing an entity here?
Yeah, so I was CEO of Abu Dhabi Global Market Financial Services Regulatory Authority between 2015 to 2021, right? So it's also here that I got to know about crypto in 2017. And then after I got to know about crypto, I invest quite a lot of time to understand this sector. And the more I understand, the more I believe that this is going to be the future of finance, the future of money. But for it to go mainstream, if I remember, if those that are involved in 2017, you remember those were very early days. Probably less than 1% crypto adoption globally. Today is close to 7%, right? So for it to go mainstream, it needs two elements to come into play. Firstly, you need proper rules and framework to regulate this space. I'm looking at Wai Lam, one of my co-conspirators who is still with ADGM now in financial services. And we work on a framework to say, look, we need a proper framework to try to regulate this space, to give certainty to industry players like yourself that wish to be regulated, but also certainty to consumers that are looking out for what protection they have, right? So it's only with clear regulatory framework and that the institutions will come in. If it's pure retail space, the asset class is going to be very volatile, right? There's going to be slightly less research into this asset class. But once the institutions come in, there'll be new product structuring, there'll be new research, different type of liquidity, long-short strategy coming into play. So all those are big positive. And 2024, we have seen that come to play, right? So again, this is very early adopter, but I must say, in general, Abu Dhabi, UAE, has foresight to invest in many of this new technology way before the rest. President Trump has just announced his AI and crypto czar, highlighting the importance of these two technology for the future of the world in terms of supporting every economic sector. But Abu Dhabi has invested heavily into these two sectors very, very early on. So is that foresight, the willingness to experiment, support innovation, that will continue to make Abu Dhabi the place to go to?
We expect over time, Abu Dhabi will become definitely crypto hub and AI hub, and eventually center of the world. And today, I'm going to wrap up here. Thank you for coming to our session, and please, I hope everybody here get take a brain of Richard today. Thank you.
Thank you.